Good afternoon, everybody. Today is Thursday, the 16th day of January 2020. Dwayne is still sick, so I'm just going to go through, the morning session like I always do. And if John happens to pop in while I'm still going, then I'll turn his mic on and I'll let him go. But if he doesn't, then I'm probably just going to shut it off. I don't know. We'll see how things go. But let's bring up the spreadsheet first. Well, no, let's bring up this other thing. That pretty picture of Dwayne. Hang on. Here it is. Get started today. If you have not taken a free trial, that's what it says right here. That's what it is. What did that say? 1,200 subscribers. Anyway, 5-day free trial, apply.cfrn.net. If you click on that, it will bring you to, well, let me click on it. It'll bring you to this page. All right, on this page, if you want to take a free trial with us, this is all you have to do. Go here to this page, eminitrainingschool.com. In the right-hand, not in the right-hand column, in the center column. All we ask for is your name, your email, and your phone number. And you can tell us the biggest trading challenge so we can tailor one-on-one training specifically for you. Okay, you click the send button and you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. So you got to do that. All right. And so expect it in your email. So make sure you put a valid email in there, because if you put a bogus email in there, you're not going to get the confirmation link and you'll never get the free trial. Okay. So the spreadsheet, I'm going to go there in just a second. I just want to bring this up here. Okay. Hey, I already had one of those. Now I have two. Now I have three. Okay, the spreadsheet. If you have not, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Now, the last 2 days, I wasn't able to do a complete morning session, so I didn't fill in the spreadsheet. Okay, I was positive on the little bit that I could do, but my internet was messed up, and it is such a huge difference now. It is just such a huge difference. My download speed was 0.4 megabit per second, and today it's like 240 megabits per second. So big difference. They had all their trucks out here in my street yesterday after I kind of snarled at them. And okay, so today is the 16th day of January 2020. We made 14 ticks in the euro and 11 ticks in gold. We're at 197.50 on the morning session. And today it took 32 minutes and 3 trades to get to the goal for the day. At that point, we're up $110 per contract. And on the month now, we're up $1,153. That's over 9 trading days, averaging 128 per day. And on the year, same thing. Okay, because it's January. But we want to get, what was last January? 2031. And we're only halfway through. So as long as we still have, January is usually a pretty good month for us. And we have one. We have a long weekend this weekend, by the way, in case you don't remember. We're not going to be here on Monday. But we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trading days left this month. So we should be able to double that. Not gonna wood. All right, let's go through what happened today with gold. Okay, we'll start out with gold. Now, right here, 935, there was a shorting opportunity. I didn't get filled. It was a nice move down. Would have gotten the goal for the day had I gotten filled. Then there was a follow-up trade. Well, this was a momentum short, and this was another shorting opportunity. Either one of those would have been break even for me. There was a long trade right here that I didn't get. that would have been a break even. And then there was a follow-up trade right here that we picked up 5 ticks on. And then this one right here, we picked up 6 ticks. And I could have gotten a lot more on this because this move up, you see how there's no wicks down at the bottom? This was like a straight up move until it got right here. And it just took off on me. And I was just moving my stop. And I had just dropped it at +5 because that's all I needed. But it slipped me 1 tick positive and gave me +6. It had a follow-up right here that I didn't get. And then right here, I drew this line in and I said, it looks like it's probably going to fail here. And boy, did it. And when it did fail there, it didn't give any trading opportunity all the way down. And I drew this line right here because I wanted it to break this level. Now, I was going over this in the morning session. Brian was asking me why I did this. To him, it seemed like I did it differently than I normally do it because I did this here and I did it differently on Crude, but it went straight down here. That's why I did it like this. We didn't get a pullback. On Crude, we did get a pullback, and so then you got to look at, you know, where the lows are. See right here, if you were drawing a trend line of the swing low, it would be like that. Whereas on Crude, thanks, Thomas. I will watch that video. Whereas on Crude, it had gone down and it didn't break this swing low, but it did create a new swing low because it pulled back up and it created a new swing low. That's why it was different. I don't think Brian's in here right now. I'm not sure. No, he is not. That was the difference. And I'll show you that when I get to Crude. But anyway, it had this huge move down. We didn't get a trade set up in there. There was a trade set up right here at 1017. I don't know why I didn't highlight that, but there was one there. Then we broke dynamic support and it gave another one right here. I'm guessing it was going into the low of the day. That's probably why I wasn't doing anything with those. Hang on, Jade is texting me. All right. And, well, there was an opportunity right here. I didn't get filled on, went down into the low of the day. That would have been a break even for me, or maybe a little bit of profit. It turned around, started to move up, and there was a long opportunity right here that needed to put in a higher swing, and it finally did, but then it turned around right here at dynamic resistance. You see it never broke the dynamic resistance right here. It never closed up above it and broke it. So we never had another trade set up on the follow-up there. Okay, then it got kind of sideways. During the break, there was one bounce off the BBC right here. Now the rules for the trade setup are the MA1 has to, well, first you have to have a trend, higher highs, higher lows. You have to have a trend, and then the MA1 has to cross the BBC. The MA1 is the red and blue line, BBC is the green line. Price has to pull away after the cross, which it did. Then it pulls back down and touches it, and then you look down here in the slingshot, and the cycle's got to be red. Blue, I'm sorry. For a long trade, it's got to be blue and above the green line. And we had all that. So there was one nice trade set up right here during the break to grab that long. Okay. The euro, normally we don't get anything out of the euro. You can see during the break we got, well, pretty much. I'll show you in a second. I'll get to that. We started out here. The pre-market, the euro was moving around okay. Then we finally got into it, and we picked up 10 ticks on this first trade and 4 ticks on the second trade. Now, the second trade I had put on, and then I had to go for a minute, and I came back and realized I had left it on. I could have gotten more out of that second trade, probably another 10, but I only ended up with 4. And then you see this is a head, and this is a shoulder, and this is a shoulder. It started to break that right over here. During the break, there was a... Now, I wouldn't have done this because I would have said, we need to break down below there before we're going to trade on the short side. That's what I would have said. But there was a bounce off the BBC right here. It met all the requirements except the trend part. And there was a bounce off the BBC right there. And that was all there was on the euro. Okay. And crude oil. Let's get to crude. What do we do with crude? We just had the one break-even trade. Okay, now crude had some movement in the pre-market, you can see. And remember, crude opens up at 9, not 9:30 like the rest of the markets. So a lot of times in that half an hour in here between 9 and 9:30, there's going to be some pretty good movement in crude a lot of times. Today was even before then. But we took one break-even trade right here. We missed this long trade right here that would have been a break-even had we gotten it. We missed this short right here that would have been profitable had we gotten filled, but we didn't. And let's see, we get way over here, and it did nothing during the break. Once it hit the high of the day, it just kind of stagnated. It was just done. It's pulling back now. If it tests the BBC here, you got to watch because we have dynamic support here that has not been broken. So you got to watch for that. Make sure that any entry is going to be above the MA1 until you break this dynamic support. Okay. And the ES, well, we tried right there. We had to break even on the ES on that one right there. And that was all there was, really. There was one here early on that I didn't get filled on. And then it was just garbage the rest of the morning session. For those of you guys who are partners, we're going to have a partners meeting tonight. Dwayne's not going to be there. It's, it's going to be up to you guys to ask the questions. Okay, I'll be there. Valerie will be there. But I doubt that Dwayne's going to be there. And he's probably out for the week, I imagine. So if you have any questions and you want to email them in, email them to support@cfrn.net. Okay, email them in ahead of time. Now, I don't follow Telegram the way that Dwayne does, and he doesn't follow email the way that I do. So if you have questions, don't put them in Telegram, email them. Okay. And back to the spreadsheet. Today's the 16th day of January 2020. If you're going to look at the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, as I said, we made 14 ticks in the euro and 11 ticks in gold, put us at 197.5 per contract on the morning. And today it took 32 minutes and 3 trades to get to the goal for the day. At that point, we're up $110 a contract, and we took a total of 6 trades. On the month now, we're up $1,153. That's over 9 days, averaging $128 per day. Same thing on the year. Okay. Now, if you have not taken the free trial and you want to take the free trial, go to the home page here at CFRN.net. And right here it says apply.cfrn.net. Click on that, and you will be brought to this page, EminiTrainingschool.com. On this page, all we ask for is your name, your email, your phone number, and you can tell us the biggest trading challenge so we can tailor one-on-one training specifically for you. Hit the send button, and you'll be sent a confirmation link. Now, if you don't hit that confirmation link, we don't know that you took the free trial. Okay? So you got to hit that confirmation link. All right? All right. And that's it, guys. That's what I got for the morning session. I mean, the afternoon session. Do you guys have any questions? Any of you guys have any questions? I'm here to answer your questions if you have them. Now, I posted the link to Bert's webinar that he's going to be doing. It's at 2 Eastern. Okay, 1 Central, 2 Eastern. And he'll go over all the same stuff, but in slow motion. He doesn't tend to talk as fast as I do. And he doesn't really do it in a live market either. I mean, it's a live market, but but he's not gonna. I don't think it's. I think the NFA would have issues with him if he started putting stuff on in front of you. All right. Well, I don't see John R in here. I see John O.R., but not John R. Oh, there he is. He just popped in. Okay. Hang on, I'll wait until his mic comes up. There he is. All right. Bring him on. John.
Yeah. Hello.
Hey, I was just saying, I don't see John R in here, but you just popped in. Great, good timing. Dwayne's not here again, so
okay.
So it's just us.
Alrighty. You want me to kick it off, or?
Yeah, go ahead. I've already done, I've already done all my stuff. So.
Okay, great. First of all, we had a couple of successful calls. I think everybody who was listening at the time heard me say quite unequivocally that I thought the lows were in on Tilray at 15, and we highlighted it again at 16, and then a couple of days later it goes 17, and yesterday it hit 22, about 22.40 or something like that. It's come off a bit since. I think come back to test the 20 breakout. Look, it could go a bit below, but I'd be inclined to buy the next dip on Tilray. Obviously, it was a pretty dramatic up move from where we called it. And the other one was platinum. I actually said a couple of days ago to several people, I thought platinum, I would have said it on air if I'd had the chance. I thought platinum was going to break up through 1,000 with some vigor, and to be honest with you, kind of even overshot my expectations. We got up to about 1,040 yesterday. This is a new 4-year high, and we've subsequently pulled back, which is not I guess to test the 1,000. It could come down to maybe 995. It's currently about 1,007. So it's having a sharp pullback. This morning, palladium made new all-time record highs, I think around 2240, 2240, 45 or so. It has subsequently pulled back. I actually think that might be it for a while on the palladium. 2240 was sort of getting up towards one of my targets, and we're having a bit of a pullback here. Now, since the last time I was on, something really major happened. That is, Bridgewater Associates runs the largest hedge fund in the world. They have $160 billion under management. And Ray Dalio himself, I think he's worth about 35 billion, who's the founder, listen, I honest to God don't ever recall Bridgewater or Dalio really commentating very much on gold. He might have been bullish, when it was kind of going up, but I never sort of heard him make anything like the announcement they made a couple of days ago, which is basically they're calling for $2,000 gold. And gold has gone up somewhat since they made that announcement. We bounced up over the last couple of days, $10, $20. What normally happens when you get a very big player like this makes a call, sometimes it takes a few days for the market to digest it. Sometimes it can take a week. But I do believe, because of the way that the JNUG and the nuggets and the golds in general, I called people yesterday. I said, look, I think take your profits on after the 2-day run up from a very difficult buy point. We went from the 670 or so, low 70s on JNUG right up to 77 yesterday, maybe even a bit higher actually, and. We came back down this morning to about 73. I said, consider buying the dips again. I'm not, look, we could go lower still, but I do believe that the next upturn in gold could actually be a kind of a runaway situation to the upside. You know, when the world's largest fund with 160 billion under management makes a call as dramatic as they have just done, you know, it doesn't get lost on too many people. You know, some of the biggest players in the game are taking notice. And you know, look, I've gone over this before. You got the elephant in the room, Russia buying 40 tons of gold every month almost relentlessly. China, same thing. And right now, 95% of the world's population, basically everybody except those who hold US dollars, are seeing gold making all-time record highs in their currencies. So this is a monumental development. It's virtually unprecedented. So I think that, you know, back in 2016, there was an election, which was an election year. We had it was sort of like about from the middle of January, there was a kind of a run up, and there was a bit of a choppiness and we pulled back in the gold. And then from about the middle of February, it really took off and went, actually the gold stocks had the biggest up move in 30 years. You know, I honestly can't say exactly when this liftoff will happen, but I would say I'm pretty sure that by March it's going to happen, by sometime, maybe the middle of March. It could happen sooner. The other thing I want to say is, in spite of the mania that's going on in this market right now, where it just won't quit going up, it's more and more looking like 2000. You know, the first quarter of 2000 was very strong, and we didn't top out until March the 10th, and then we pulled back and had a rebound up to March 24th. And on March the 24th at 2 o'clock in the afternoon, I sent out my sell alert, and I had Merrill Lynch on, you know, I basically said the Nasdaq's going to fall 760 points and 50 points in the next week, and it's all over. You know, it's a time to get out. And I think I said buy gold at the same time back then. But within 10 minutes, I had the biggest trading desk in the world, Merrill Lynch, on the phone to me, saying, "Is this really it?" And I said, short of shouting fire in the cinema, you know, this is it. It's time to hit the exits. The rest, as you know, is history. And one of the things that kind of stuck in my mind at the time was, even though I had a feeling that the market was going to fall, I kind of thought to myself, you know, we've never had a crash in March or April before. And next thing you know, April the 5th, I think it was, or 6th, the Dow fell 1,000 points in one day, more than 1,000 points, biggest loss in history. So I actually have a feeling that that's going to happen again this year. And one of the things about election years is there's always a hit. Every single election year, there's some kind of a hit. You never know when it's coming. Can happen. You know, the last time in 2016, the hit started on the 2nd of January, and it resulted in a very severe sell-off in the first, you know, down to January the 15th, and then there was a rally, and then down to February 10th. And on February 10th, as you know, Trump won New Hampshire, and right after that, the market took off, and we basically were expecting a 2,000 point run to the upside, which is basically what we got later on in the year. I actually think that based on how strong this market is, you know, the first 5 days, so goes the month, so goes the year. We're having one of the strongest Januaries ever right now. So assuming we continue this rally into the end of January, look, by the way, this China deal is just so monumental. You know, if you want to Google Kyle Bass and Steve Bannon yesterday on CNBC, they kind of gave their take on this deal before the open. And there was a little bit of a pullback yesterday, and then the market took off again. And it kind of reminded me of the tax cut. And, as you know, people who were listening on the show at the time, we were super bullish on the market and going into the tax cut. And we were even bullish thereafter, because I went back to 1986 and noted that the market rallied almost a year ahead of time into the tax cuts that happened then. And when the tax cuts actually happened, the market continued higher, and actually continued higher for a pretty long time, much as this is going on right now today. However, from about the market only managed about 2 to 3 months beyond the tax cut signing, 2017, before the 2018, the first correction. So that sort of fits with this deal being signed yesterday and potentially having a couple of months of continued upside, similar to what happened after the tax. But after that, we could be in a lot of trouble. And, 1,000-point drop in 2000, April 2000, it would be a 3,000-point drop today. So that's worth keeping in mind. The other thing is we are at the moment 29,153. So we're only 850 points or so from cracking 30,000. Now, that is not like being at 9,000 going on 10. It's more like being at 9,700 and something, 9,750, with only a little, literally possibly an up day or two to getting through 30,000, and it kind of looks like that's going to happen. Now, also, when you get these FANGs all making all-time highs, as they are at the moment, including Facebook, it's not, the reason why that's happening is because the number crunchers are figuring that they're going to beat expectations, just like most of the banks did yesterday or the day before. And what would, there's actually a pretty good analogy for the Dow right now is platinum. A few days ago, platinum was like 970, 980. So it was very close to 1,000, and it basically just blasted through 1,000, almost gapped through 1,000. And that's kind of what I'm expecting to happen, going through 30,000 in the next possibly week or so, week or two, especially if the results come in better than expected. I mean, that could really set off a bit of a mania in the stocks. Also, there's something else going on that is very, very bullish. I talked about this before. When the market's hitting on, like a V12 on all 12 cylinders, it's almost like resetting the whole thing back to the last time that happened, which was probably in 2018 or 2019, and certainly happened in 2017 multiple times. In other words, the transports were making new all-time highs. The Dow was making new all-time highs. The mid-cap, the Russell, the S&P, the NASDAQ, the whole thing. So, and semiconductors. And so now there's still a lot of indices that are not making new highs, like the healthcare and stuff like that. But the majority of cylinders are firing on, all cylinders right now. The one thing that has not quite made it yet is the transports. But in the last few days, they've started to rally pretty strongly. And they really are looking like they're going to break through to an all-time high here, pretty soon, within a few days, perhaps. Mm-hmm. So that is going to generate a Dow theory buy signal. And listen, it's kind of crazy, when you generate a Dow theory buy signal at 29,000, maybe 200 or 300, something like that. It's a very, very big deal, because it's the same as turning the clock back to 2017, to the summer of 2017, in particular Bastille Day, back then. It was one of the most notable Dow theory buy signals we generated. And right after that, the market went into a tremendous multi-thousand point upswing. So, you know, getting above 30,000 is a pretty big deal. And it's, in all likelihood, it's very probable or possible that we will go to about 33,000. You know, and look, we could go to 33,000 possibly by March, and then we could have a 10% correction and come back down to the 30,000 and, you know, test the 30,000 level and then continue going back up. And theoretically, we could go higher into the election if everything continues to favor the incumbent. I have a feeling that the election might be the opposite of what happened in 2016. In other words, if Trump has a landslide victory and wins 460, you know, electoral college seats, you might have a post-election like mania, you know, blow-off that actually could reverse, you know, in the same way as when the Dow dropped 1,000 points the night Trump was elected and came back up. It was the beginning of something very big. Sorry, listen, I got to take this. I'll be right back.
Okay. All right. All right. Well, you know, the presidential cycle, typically the way that it works is 2 years into the election is when the market starts to run, and it runs until the election, and then it usually sells off. That's the typical presidential cycle. You know, of course, John's given you specific dates because, well, he's got this memory that I just don't have. and yeah, he's also giving you all kinds of stuff about the metals and all that. Now, the indexes, you know, you've heard Dwayne say it in the past, the indexes are designed to go up. They're not designed to go down. So if you can hold long term, then, you know, obviously you could buy the indexes. And John's talking, when he's talking about 29,000, you know, 200-300, something like that, he's talking about the Dow. But if the Dow is going to continue to go up, so is the S&P. And if you look at the S&P on a daily, let's do that. You see, we're making all-time highs right here on the daily, on the current contract anyway, all-time highs. And you know, it shouldn't be lost on you that these are the good old times.
Hi, sorry about that.
All right,
So,
that's okay.
you know, strange things happen, like this deal yesterday. They talk about all this buying that's coming from China, and the grain markets went down a bit, not by much. But you know, again, look, you know, I just talked about Ray Dalio and Bridgewater making this call on gold, and you know, we're not. I mean, you'd think gold would be up like $100 already on a news like that, but it often takes time for people to get the trend going, if you like. And the classic example is, and I think I mentioned this on the show almost the day it happened, Susquehanna, which is a group out of Pennsylvania, they upgraded Micron in early December, and they also upgraded Western Digital. And in my opinion, Western Digital is a very key, you know, leading indicator of the economy. And it had been in the dumps for a while, and they upgraded it, and they also upgraded Micron, and it didn't actually move right away. You know, it took a few days to digest the news, and then it took off, and Micron has been, you know, moving up pretty sharply ever since like December the 3rd or so. and it's gone from like 45 to 50, 58, 59, 58. And Western Digital has gone up similarly. So that's what I'm alerting people to watch for the gold, because I really believe that the next move up in the gold stocks that takes out the highs of the last couple of days will be potential beginning of a pretty big run up. And when we start taking out the recent highs of the gold stocks, we could really accelerate higher. And the platinum, look, the palladium is, you know, I think I've kind of, you know, just to recap on the market, I think I kind of laid out the scenario here for the market as I see it going forward. So let's go back to the gold now. Look, palladium is a very reliable long-term leading indicator of the metals, of a metal bull market. In the early 2000s, palladium went up very dramatically, and shortly thereafter began a 10-year bull market in gold. Okay, and we had a 7-fold increase in gold from basically 2001. More recently, palladium has gone from 500 to 2240, which is more than a quadruple. That's you know, it's a really big deal, and I actually believe that it is foretelling of a quadruple move up in gold. Definitely a double from here. We're 1552 right now. We got every chance of going to 3,000 fairly easily, actually, and possibly 3,400. If that happens, we might pull back. You know, we could go up to 3,000. We could possibly pull back to 2,000, even 1,900, and then I think we could go all the way up to you know, we could basically quadruple from the 4,000 level, from the 2,000 level up to about 8,000 in 2022 or 23. Why would that happen? Well, look, we're already making new all-time highs in virtually 95% of all the world's currencies. So, you know, gold is in a kind of a stealth bull market that is only just dawning on people now, that gold is becoming a pretty hot area. Also, so what happens is there's a sequence. You know, you get palladium is the leader, and then you get platinum, and then platinum, silver, and gold. So what happened before was you had palladium went through the roof in the early 2000s. And then in 2008, platinum hit about 2250, right? And at that time, it became the most expensive precious metal at 2250 ever, okay? And then in 2011, in May 2011, silver hit 49.60 or so, right? Just shy of $50. And it topped out 5 months ahead of gold. And then in September, we topped out at 1923.5 or 1923.60 in the middle of the night in September of 2011. And really what's going on is, after this correction, which has been a 5-6 year correction, we bottomed in 2016, so did the palladium, and it's been going up ever since. Kind of a 4-year uptrend. I believe there's another 3 years to go, 3 to 4 years to go in the gold market, which, you know, from today, it would not, you know, given what happened to palladium, it's logical. Look, palladium didn't go up 7-fold in 2000, in the early 2000s. It went up like 2 or 3-fold, something like that. But gold ultimately went up 7-fold. So even, you know, if palladium quadrupled in 4 years, it could be portending and a quadrupling of gold, or even something bigger than that, possibly to 8,750 is my target. So The silver, the hard part to wrap your arms around right now, or you have to wrap your head around, is the fact that platinum has been the laggard, and it hasn't really, it's kind of, the gap is widening between platinum and palladium, although that could be coming to an end soon, and platinum could start catching up, especially if it starts taking out 1050. Platinum could have quite a rapid move, could find its way at 1200, 1300, 1400, even 15, 1600 pretty quick. And that would actually be super bullish for gold. So it could actually start chasing gold. It could actually overtake gold, and potentially potentially outperform gold in a very dramatic way in the next few years. And the silver also could come from behind and do the same thing. So it certainly looks more and more plausible that could happen. So
where's silver right now?
Silver's at just shy of 18. It's about 17.97. Now, listen, I look back. I went back to sort of like I think it was the first quarter of 2011, right? And gold was still only like 1,300, right?
Mm-hmm.
This is 2011. Gold was like 1350, 1349, and silver was like it had already sort of taken off. I think it was 27, or maybe it was either 24, 27. I mean, listen, this was in the first quarter. Just 3 months later, we hit the 1st of May, and we're $50 on silver. So things could happen very, very rapidly. Because remember, we were at 1,300 in the early part of 2011, and we hit 1,900 by September. So, and need I remind you that in 1979, gold was 200 at the beginning of the year, and it was 850 by the end of the year, or by January the 20th the following year. So, and most of the move in gold happened in the last 6 months. So that is, very much on the cards. Now, this article by Ray Dalio, you got to Google it. I've prepared a piece. Maybe when Dwayne's back, we'll get it out to people if they want it. But it has all the elements of what I've just put together, and it is an incredibly compelling situation because, in order for this to happen, a number of things have to kind of slot into place. And as I've said before, we're seeing, you have all these repos and all this stimulus, and the path of least resistance is the rally that's going on in stocks like not right now that seems unstoppable. And the second thing is, ultimately it's going to flow into gold, and it's going to be super bullish for gold. In the following years, we don't know whether it's going to be next year or the year after, but it's certainly building up a kind of momentum for that to happen. So, but the key thing, the key thing that is really something to take note of, and is one of the elements behind the forecast by Bridgewater and Dalio, is the Fed has basically gone inflationary. In other words, they're going to do everything in their power to get inflation back in the system, to get inflation going. And that, you have to say sometimes be careful what you wish for. They spent all these years fighting inflation, and now they're kind of promoting it. And when they do that, the genie's out of the bottle, and you can potentially have a worldwide inflation wildfire, literally an inflation rout that could be very hard to bottle up, and it could get out of control. It could really get out of control. Ultimately, it's a form of monetizing the debt, because the dollar will probably get weaker, and as the dollar gets weaker, the debt in relation to in terms of dollars. Look, if the dollar gets cut in half, the debt effectively gets cut in half, and you got to start over, and you potentially clean up part of the system. Unless you reset the whole system and create a new currency, you're probably not going to be able to eliminate the debt anytime soon, and the debt's probably going to get out of control before that happens, which is another reason why gold could go substantially higher. But the whole world is plagued by debt, and the fact that all these currencies around the world are struggling against the U.S. dollar is testament to why gold's at an all-time high in all these currencies around the world. So there's a lack of faith in currencies, and right now the dollar obviously has a lot of confidence, but that doesn't always last forever. And if I would say when the market inverts, maybe the dollar will as well, and that's why you'll probably see an explosive up move in gold when that happens. So once the dollar starts going to new yearly lows, I think it's curtains for the dollar, because at some point, look, in spite of all the good things that Trump's doing, there are other issues that are insurmountable. No matter what you do, listen, we got a $500 billion trade deficit with China. 250 billion certainly plugs the hole, but it's not a leak that's easily sealed, if you like, or reversed. And so, in spite of all the good potential of this deal that's been pulled off, it's not going to right the ship soon. It's going to take a long time. Now, one of the reasons why you should listen to Cass and Kyle Bass, rather, and Steve Bannon is, what Trump is actually doing is he's kind of, we talked about this a long time ago, he's creating a kind of a fiscal paradise in the U.S. He's attracting companies here because you pay a very reasonable corporate tax these days that stops people from going offshore, keeps the companies here in the U.S., and revitalizes manufacturing in the U.S. And
isn't he punishing businesses that are out of the U.S.?
Say again, sorry?
Isn't he punishing, taxing businesses that are?
Yeah, effectively he is, yeah. I mean, look, they're going to get the memo soon enough, but they're not. There's no, they're trying to, a lot of countries around the world are trying to follow the Trump doctrine now, but it's not something they can do overnight. So they've got a window of opportunity here for the next few years where, the U.S. could be, the USMCA is actually pretty clever. A lot of the new elements in that are making Canada, the North American continent, if you like, the manufacturing choice of the world, and the business investment choice of the world. So the three countries can potentially grow together, add a lot of growth that wouldn't be there without this deal. And also, it's a very big population, 500 million people between the three countries makes it a serious competitor to Europe, similar sized population. So, and a lot more, and then maybe the Americas can be brought into the whole deal in the future, so that the entire Western Hemisphere becomes a formidable, revitalized manufacturing center and a fairly rapidly growing economy. And look, if the dollar goes down, it just makes it sweetens the pot. It makes the U.S. even more opportunistic, because it makes it more competitive in global terms. So that's the story for today.
Okay. I'm sorry, I'm just setting people up in Ninja Trader right now. Well, thank you for coming on, John. And
My pleasure.
Tomorrow, I don't expect Dwayne's going to be there at the partners meeting tonight, or probably in tomorrow. So if you want to come on early tomorrow,
okay.
I usually wrap up around 12:20 my time.
Okay, great.
And,
listen, thanks very much for the invite, and we'll see you tomorrow. All the best.
Okay, we'll talk to you tomorrow. All right. It sounds like here. I'm just gonna mute John because he's wrestling with his mic.
I'm good now.
Okay. All right. All right. Dr. Tom.
Hello, how you doing, Michael?
I'm all right. All right. Dwayne is sick, so
Is that mentally or physically?
it's arguable. It's arguable. But no, he's got the flu.
Oh, bless his heart.
So
Well, I'll be praying for him.
Yeah. Yes, we are all praying for him. But I'm sure he hasn't been here in 3 days, and and I lost my internet for 2 days, and
oh, gracious.
Yeah, I got it back yesterday, but last night I had 3 trucks out here outside my house, Spectrum trucks.
Wow.
Working on it. But yeah, so yesterday, I was doing stuff from Jada's parents' house using their internet, and yeah, it's just been a stressful couple of days.
I can imagine. A lot of people tell me, if you got a problem, just use a hotspot on your phone, but I don't find that very helpful, frankly, because it's not fast enough.
Well, it was way faster. My phone was way faster than what my desktop was, but then I got to use up all my data, and I don't have unlimited data on my phone.
Right.
So whatever plan Jada's got us on, I think we have like 30 gigs of data per month or something like that, and with the internet being down, the kids used up 3 gigs in the last 2 days, and so yeah.
Well, got to keep an eye on them kids.
Yeah, I know. I know.
Oh boy. So how's the I haven't had a chance to look. How's the gold market doing overall?
The gold market?
Yeah.
Well, that's what we were just talking about with John.
Okay.
He was saying that what's his name? Hang on. Bridgewater's CEO.
Yeah. I know who you're talking about, but
yeah. Well, anyway, here he is right there, Ray Dalio.
yes.
He's saying we're going to get up to $2,000, possibly $2,000 gold relatively soon. And John was going on about how if that guy's saying that, the head of the biggest hedge fund in the world is saying that people are going to start to get the clue, and
yeah, because he's been pretty accurate time and again.
Yeah. Well, here we have the high of the day today was 15. Well, 15. Is this a 15-minute chart? The high of the day I show at 1558.2, but I see a wick up there at 1558.7. Overall on the day right now, gold's in a downtrend, but the low of the day is 1548. So it's not a huge range like we've seen in the past couple of weeks, but it is it is in a downtrend right now on a larger time frame. When you jump into the shorter time frames like I do, then there's a lot of opportunity in a 15-minute bar on a 4-tick range bar. And
what's the very high you see there?
It was 1558.7, I think, right? 1555.7.
That's today, but a few days ago it hit something higher.
Yeah, 1600, I thought, right here.
Okay, that's what I was told, but I couldn't find it on my charts. That's good.
13 and a half.
Well, that's good. Yeah, tell you a little story, because I study stock market history, and for decades and decades, the conventional wisdom was that the Dow would never break 1,000, that it was impossible, right?
Yeah, I remember when it did.
Oh yeah, you were around then, right?
Yeah, well, I was a kid, but I was still trading. I was like 12, but I was still trading equities.
You were already, huh?
Yeah. Oh, I had a custodial account my grandfather set up for me, so
That's funny.
I could trade, and because back then you weren't supposed to be able to trade until you were 16, and I was 12, I was in 8th grade.
So you were a child prodigy.
I was a trader anyway. I made
Did you make
300%
money?
my first year. Oh yeah,
300?
yeah, 300% my first year.
I'm gonna fly out there and shake your hand.
Yeah, I bought all the stocks that, well, I didn't buy. I had Telex, National Patent, Publicker, and Chrysler. And I owned Chrysler before Lee Iacocca came on, and when it was dying, Chrysler was dying. I had bought it at 8 1/4, and it went down to like $2. And I remember I had my stock certificate, and and I was showing some kid in my class, and my teacher, whose son was a broker, so I had a Chrysler stock certificate, and she's like, "Oh my God, Michael, you got to sell that, sell." And I said, "No, I'm gonna hold on to it." And I did sell it eventually at $33, but I bought it at 8 1/4.
Wow. So you made a triple.
Yeah.
No,
Yeah.
quad.
Quadruple. Yeah.
4 times it. Yeah.
Yeah. But Telex was the big winner for me because I bought Telex at 6 1/8 and I sold it at 106. So that was the big winner for me in the beginning. And
pretty impressive for anybody, especially for a kid, right?
Yeah. Yeah. Well, back then I had patience and I didn't need the money, so I could hold on to things for a while. And
Sure.
now I don't like to hold anything overnight. I've learned my lesson.
When you were holding for a long time like that, did you ever get into selling calls against your stock?
No, I never got into options until I was older. I was older when I started looking into options. But no, I had actually started a little kind of, I'll call it a mutual fund when I was in high school, when I was in prep school, and me and a few friends put some money together, and that was a 300% thing that I made. My initial equity, I still own one of them. I still own Publicker. And I've owned that since 1981, I think, something like that.
Wow.
Yeah, that was one of the original ones my grandfather set me up with, and I never sold it.
When you're buying a stock and you're holding it for a long period of time, and you're going to hold it, cover calls are a great strategy. A lot of people mistakenly think it's a negative strategy because you're selling the call, but
Right.
It's not. It's a neutral to positive strategy. You're selling the call because you think it's going to go up or at least stay even, and you sell it. If you sell it properly, and don't try to get greedy and get the really big premiums go out 2, 3, 4, 5, 6 months, but you sell out 30 days and let it expire and then sell it again and sell it again. I had clients who got their cost basis on their stocks down to 0 by selling calls.
Right. I understand it. And the Publicker thing, I would have to look at the prices that they're getting for the calls, because it hasn't moved. It's been on New York Stock Exchange, the same price for 35 years. Really?
Wow.
And
that probably wouldn't be a good candidate then. But what you want is something that a lot of people believe is going up, but you don't think it's going to go up that much in the time period. I always say, if you're buying, you want to buy calls, buy puts, and buy as long as you can do it, because you want to buy enough time to be right. But if you're selling, it's just the opposite. And everything in the markets really is opposites, isn't it? If something's going up on big volume, that's a good thing. If it's going down on big volume, it's bad. Everything's opposites. Well, anyway, what do you think about learning a little about gold and silver today?
Well, I haven't watched the silver, but with the trading that I do, I'm just taking little pieces out of the middle when gold starts to move one way or the other, and we were profitable on gold this morning. But what do I think it's going. I think it's going to continue going up over time. But
what I'll be talking about in the PowerPoint is not so much about specifics of trading, but generalities about gold and silver. Because if you understand the history of precious metals as money, not as commodities, then it helps you trade them as commodities. So if you want to flip the screens to me, I'll show you what I got.
Yeah, I'll send it over to you. Hold on a sec.
And give Dwayne my best, okay?
Okay, I will. Here you go. You are now going to be the presenter.
I feel so honored.
Okay, let me move it over here. There you go.
All right. So I don't usually do this, but every once in a while I like to kind of, give people my background. I've been, a pastor for 45 years, and the last 15, 16 years that I've been a bishop, which means I'm an overseer, pastoring pastors. I'm not pastoring a church now, but I've also been a businessman for that entire 45 years. Started off in construction, then very quickly moved into financial services. So I've been a financial planner, stockbroker, national vice president, investment banker, even a compliance officer. I teach on biblical finance worldwide in churches, seminars, colleges, and conferences, both Christian conferences and secular. And I'm the CEO of Golden Art LLC, which is the company where I import the best investment grade gold in the world. So I feel like the Lord has called me to be a watchman on the wall, to warn people of what's coming and how to prepare for it. So that's just a little reintroduction for the people who are on that have never heard me before. All right, CFRNgold.com. Definitely pay attention to that. If you will write that down. I'm going to talk about some things today, and I'm not going to be able to go into them in depth as I'd like to, because I'm doing a 30,000-foot view. So you'll find more detail at CFRNgold.com. And when you go there, you just fill out the form, and we will send you a really interesting gold education starter package. But just as important, you'll get an invitation to attend our webinars that we do on Monday night. And we have some of the finest teachers on business, finance, economics, and so on in the world that teach on this. We get Christian teachers that understand both the markets and the business world and the Bible. So you're getting a good overall view. And if I can't get anybody great to teach, then I'll just teach myself. But I had one guy, Michael, that told me that he had been on our webinars for a year, every Monday night faithfully. And this guy had a master's, I think it was business administration or finance, one of the two. Anyway, he told me he'd learn more about how markets work and how to invest and how to defend against inflation and so on in 1 year, listened on 1 hour on Monday nights, than he did in all his years in graduate school. Because unfortunately, the people who teach business in colleges, you think, well, they're business experts, right? You would hope so.
You would think.
Yeah. And some of them are. They're usually the part-time teachers. They're people that just really love teaching, so they're in business and they're making money, and then they go and share their wisdom and knowledge part-time when they can. But most professors are full-time, and all of my professors were people who had gone out in the business world after getting their business degree. They failed in business, and then they came back to teach business. So what are you going to teach me, bud? How to fail?
Yeah.
So I would much rather listen to successful business people, and those are the people that we have on the Christian Financial Concepts webinar. Okay, I want to talk about gold and silver from the point of view of it being your financial survival plan. I don't think there's anybody in America that believes that we can have the stock market that just keeps going up and up and up and up. nothing goes up forever. And eventually, you're going to have some heartburn. So what about if you hedge against it with the safest investment in the world? I used to teach trading, basically charting more than anything else, but also trading and hedging techniques. And I always told people, you're going to make a lot of money, but as you do, pull some of it aside and put it in something safe and just forget about it. Don't waste it. So let's see how we can do that. The other title for this could be, and this comes from the book of Deuteronomy, how to be the head and not the tail. Which would you rather be, Michael?
I'd go for the head.
Me too.
Unless the tail's going to wag the dog.
But yeah, you got to watch out for that, right?
Yeah,
but
I'll go for the head.
I love this picture, this bulb there. Okay, first a little history. And let me just say, I'm extremely conservative. I'm a little to the right of Genghis Khan in everything, you know, fiscally, socially, politically, biblically. You know, I believe if God says something in the Bible, he actually meant it. It wasn't a story or a suggestion. But we're facing a situation now to where we no longer have a clear choice between political parties. We used to have the party of big government, which was the Democrats, and the party of small government, the Republicans. Now we got the party of big government and the party of even bigger government. So the Republicans have abdicated that position by and large. George Bush, who I had great hopes for, signed every spending bill that came his way. He never seemed to see a spending bill that he didn't want to sign. I don't think he ever vetoed one. So at least as far as economics, we don't have much choice between the two parties. The Republican Party is still better. They spend a lot of money, but not as much. Now, I think there's things that are more important than money, and those are the social issues. And that's the main reason I vote Republican. But I really wish that they would go back to their roots and we could start to attack the national debt, because as you'll see here, the national debt is one of our gravest enemies. So how did it all begin? Well, if you study your history, you know that the two blackest days in history are 1913 and 1933. Some people disagree with me. They'll say the blackest day in U.S. history is when so-and-so got elected, somebody they really hate, you know. But I'm talking economically, not politically. Let's look at what happened. In 1913, the Federal Reserve scam, and it is a scam, was conceived in secret. They had central banks in Europe, and our founding fathers either lived in Europe and came here, or they knew they were second generation Europeans, and they knew of the evils of fractional reserve banking and central banking. So that's why there's no provision for a central bank in the Constitution. And if I could be so bold as to say it, because I had great respect for our founding fathers and the framers of the Constitution, that's one place they messed up. They should have put a prohibition of central banks in our Constitution, but they didn't. They just figured that most people thought like they did. They knew it was bad. It made the rich richer, made the poor poorer, and so they went down to Jekyll Island. It's an island off the coast of Georgia. I actually visited there, Michael. I was on vacation in Charlotte, and I rented a car and drove down because I wanted to go to the scene of the crime. And I was in the room where they conspired to create the Federal Reserve System. And the participants were turncoat politicians, greedy bankers out to pad their own pockets, but not to help the country. And worst of all, European bankers who have no business getting involved in our finances. But they thought that they were the seat of finance. You know, a lot of people still think London is the center of finance for the world. So these people created the Federal Reserve act for their own benefit, not for the benefit of the nation. I wouldn't mind so much they did it in secret if they were doing it for our good, but they did something else bad. I remember when Obamacare was passed, it was during a holiday session, I think it was Christmas Eve, where they finally got enough votes together and it passed by one vote. But that's the time when people are saying, hey, I want to get home. And that's how the Federal Reserve guys that conceived it did it. They twisted arms. They told the other senators and congressmen, hey, you don't know about this stuff we do. We studied it. So you just vote for this. Don't worry about it. And I'll vote for your bill. Unfortunately, that's the way business gets done in Washington. Now, as a result of that, the purchasing power of the U.S. dollar has dropped 96% in the intervening years. And people say, well, what do you mean? It's still a dollar, right? Yeah, a dollar's still a dollar, a 20's still a 20. But we're talking about what it can actually buy. Today, it takes $25 to buy what $1 bought in 1913. And anybody that thinks that's a good thing is not thinking very clearly. So then 20 years later, may seem like a coincidence. I think it was deliberate. I think that when they passed the Federal Reserve Act, they knew that people were going to rebel against it and wouldn't accept this fake money. Because remember, our money up until this time was backed by gold or silver. It was real money. The Federal Reserve money was backed by nothing. So at first people wouldn't accept it. And then later on, matter of fact, let me go back to the previous chart for a second. You see there, when the Federal Reserve Act was passed, the value of the dollar dropped precipitously.
Mm-hmm.
And then it started going back up because people found out that the merchants were accepting it because it looked like the real money. But then in 1933, when the final shoe dropped, when they realized we had been totally scammed, then the dollar started dropping. It's never recovered. So in 1933, FDR actually stole 549 metric tons of gold. I haven't calculated this, but a metric ton is 2,200 pounds, and each pound has 16 ounces. So 16 ounces by 2,200 by 549, that's millions of ounces of gold. That was what a $20 coin was. If I had my calculator, I would run it up and see what it was.
Here, I can do it for you. It's 16 times 2,200 times 549.
Right.
19,324,800 ounces of gold.
So almost 20 million ounces of gold.
Yes.
You multiply that times what?
Yeah. 1,500.
Yeah, I mean, come on.
15.
Now,
I'll just say 1,550. That is 29,953,440,000.
So 29 billion.
Mm-hmm.
Wow. Okay.
We just call it 30 billion. It's 953 million. So
20 million ounces and roughly $30 billion in today's money. Now, how did he go about stealing all that gold from people? They didn't go door to door and say, give me your gold. He published an executive order, which you'll see in a second. And he told people, if you do not turn in your gold and your gold certificates were the real money that the government was obligated by law to give you gold for. If you took a $20 bill down to a bank, they had to give you a $20 gold coin. So they did have paper money, but most people at this point were still using the precious metal itself. And the money they had in the bank was also gold. Okay, so people had about 60% of their wealth in their homes. It's just a rough average. And about 40% of the money was either in their pocket or in the bank. So when he seized all the gold, he seized 40% of the wealth of the average U.S. citizen. That's why they had to build Fort Knox. There wasn't enough room for all the stolen gold in the Federal Reserve Bank in New York. And so they had to dig a big hole, build a big vault, and then build a military and army base over it and around it. And that's where supposedly all this gold is still kept. There's a lot of questions about that, particularly since the last photograph that was ever allowed to be taken was obviously taken around 30 or 40 years ago. You could tell by the haircuts, by the way people were dressed and so on. So there could be a lot of cobwebs there, we don't know.
Mm-hmm.
But the main thing that happened, Michael, was the financial accountability of politicians to the American people ended on that day. How's that so? Well, before you had to have $1 in specie, that's precious metals, gold or silver, $1 worth of gold and silver, to print $1 in paper. But FDR didn't like that kind of accountability. So once he issued his executive order, he could print all the money he wanted to buy all the votes that he wanted to. And I can prove that by the fact that he's the only president that was ever elected 4 times. He had tons and tons of money to buy elections with. So here's the executive order itself. When I preach in churches, I tell people, look, don't believe something because I say it. Check me out in the Bible. If it's not in the Bible, don't believe me. Well, I say the same thing here. I know this sounds insane that a president would issue an executive order that would violate the Constitution and steal $30 billion from the American people. So look it up yourself. Just search for Executive Order 6102. He did his executive order, obviously without congressional approval. He violated the Constitution, and he changed the financial course of our nation forever. I think we can still turn it around, but it's getting worse and worse. I mean, our country is becoming more and more socialist. My good friend, General Jerry Boykin, who was the founder of Delta Force, and when he retired from the Army as a 3-star general, he was the Undersecretary of State, Undersecretary of Defense for Intelligence. He goes all over the country now teaching on creeping Marxism in the United States and warning people of the dangers that is coming. So if you had to choose back then, whether to hide your gold, which a lot of people did, or turn it into government, a lot of people think, well, it looks the same. It says United States on it. It says $20 on it, and they just turned their gold in. And FDR tried to make it sound like it was a patriotic thing to do. He lied to the American people, told them, this is how we're going to end the Great Depression. I need your gold. Well, how would the government having everybody's gold help end the Great Depression? It doesn't make any economic sense at all. Plus the fact that one of the greatest scholars of the Great Depression, who is not somebody I admire, but he's very knowledgeable, Ben Bernanke, former head of the Fed, he states very clearly that the Great Depression ended in the summer before FDR got elected. But yet people were still feeling the effects of it. So he continued with the lie. And within weeks after being in office, he was stealing money from us. Well, if your granddaddy went along with that deal and just kept that $20 bill hid away somewhere and you received it in your inheritance, today it's worth 80 cents in purchasing power. The $20 gold coin, as we've been talking about, is worth actually a lot more than $1,500 because you take $1,550 in these particular coins, the $20 coins, pre-1933, because they're not really, really rare, but they're scarce. You can't make any more of them. They sell for a premium of about $100. So we're really talking 80 cents versus $1,650. I know which one I would choose.
Yeah.
So when FDR did this, he opened the famous Pandora's box, okay? Not only did he steal gold, but he ended the gold standard. Now, I've been on radio programs before, And people have called in and said, no, the gold standard ended in 1972 under Nixon. No, it didn't. The gold standard for the American citizen ended when the American citizen could get gold for their dollars. Now, for another 40 or so years, other countries could turn in their dollars or their treasury bills or notes and get gold. But I don't really care if France and Germany can get gold if I, as an American citizen, can't. It's my money, not their money. So that's what happened. But that's where the lie comes out that Nixon ended the gold standard. Nixon actually did a smart thing when he did what he did, because the French in particular, but other European countries, were raiding our gold reserves and dumping dollars that they were not worth much and buying gold at a price that was about 1/6 of the world price, because we still had the official U.S. government gold price set at like $37, and gold was trading around the world in informal markets at around 200. Well, who wouldn't want to buy an ounce of gold for 37 and then turn around and sell it for $200? You know, so he had his back against the wall. He had to do that. Obviously, FDR empowered the Fed. Before the Fed didn't have any teeth to it. I'm the dean of a Bible college, and I was teaching on faith at our Bible college last Tuesday night. And you know the verse, Michael, where it says, "The devil walks around like a roaring lion, seeking whom he may devour." You know.
Mm-hmm.
Well, a lot of people say, "Well, you know, the devil's a roaring lion." No, the Bible says, "Like a roaring lion," because 2,000 years ago on the cross, Jesus pulled all his teeth. So now all he can do is gum you. You know. Well, it's the same thing with the Federal Reserve. They couldn't make people take the Federal Reserve money. Some stores refused it. Some merchants refused it. But once he took away the real money, then they had no choice. And he gave teeth to the Federal Reserve Act. And he inaugurated socialism. There had been some socialist tendencies prior to this in the United States. But this is where full-on socialism flipped the switch. And if you study socialism in the United States, you'll find that we've become more and more like Europe and in socialism, while the communist countries like China and Russia are becoming more capitalistic. It's kind of ironic, isn't it? You know,
Indeed.
they see how the United States is prospering under capitalism. So, you know, I remember seeing a picture of the very first Russian stock exchange. It was smaller than my living room. You know, it was like 12, 15 people sitting at computers, and that was their stock exchange. Now they don't come anywhere close to the U.S. stock exchange, but the point is they're adopting our way of doing things, and so is China to a large extent, while still retaining their political philosophy of communism. And we're ostensibly maintaining our political philosophy of capitalism, but in actions, we're moving more and more towards socialism, to where the government knows everything and the government should control everything. I don't think so. Okay, here's another great American president, Lyndon Baines Johnson. He's from Texas. Good old LBJ, he liked to call himself. And he wore a cowboy hat, and you know, he was a tough guy and all that. And he had this bumper sticker when he started his great socialist move called "The Great Society: A New Lease on Life." You know, that was his motto, and people actually printed up bumper stickers. Well, as you can see, I renamed it to "A New Leech on Life," sucking the blood out of our economy. Now, he didn't get reelected, thank heavens, but he managed to get through Medicare. Now, a lot of people might say, well, that's a good thing, right? Well, not really. Okay, we would have been much better off if medicine in general had remained independent. But the more the government gets involved in medicine, the higher prices get. In any given point in our history, since we started with first private health insurance, which was also a bad thing, then the Medicare and then Medicaid and so on, people figure out ways to game the system. And doctors prescribe tests that aren't needed or that they didn't ever do. They'll put it on the paper. Nobody looks at the bills. Nobody says, hey, doc, you put down you did these 6 procedures. You only did one thing. You know, I do. I look at my insurance statements because I don't want insurance fraud because it makes it more expensive for everybody. But just the fact that somebody else was paying for the medical care, that in itself caused medical costs to go up. So medical inflation is always at least double the general inflation. And at times in our history, it's been 3 and 4 times higher. And it's because the government is paying for it. Anytime you have somebody else paying the bill, if you had to pay it out of your pocket, Michael, if you had the sniffles, would you go to the doctor?
Probably not. No.
No.
No, and I do pay for mine out of my pocket.
Okay. So if people have government insurance, not only do they go to the doctor for unnecessary things because there's no doctor around that can cure a cold.
Right.
Okay. But if the doctor doesn't have to be open, they go to the emergency room where it costs 4 or 5 times as much. And their great emergency is they have the sniffles, they have a cold. So LBJ promised the American people that he was going to insure everybody, which of course was a big lie. Everybody would have health insurance, and that it was going to cost the average American family $1.50 a month. Well, those of us that are paying hundreds of dollars a month into Medicare, no, just into Medicare. That's just into the Medicare portion. We pay into the Social Security system. We pay into Medicare. It's a lie, just like all socialist lies are. Now, Ronald Reagan, why am I putting him in the same category as FDR and LBJ? Well, he was one of our greatest presidents, probably at this point in time, the greatest president, at least in my opinion. He did some great things. He took down the Soviet Union. He dramatically lowered taxes from like 72% to 28%. That's pretty impressive.
Mm-hmm.
But he campaigned on balancing the budget, and he failed. Because Congress blocked him.
Yeah.
And Congress blocked his efforts to curtail spending and reduce the debt. So even though he's a good guy, he didn't do good in that. Now this guy really ticks me off. Dick Cheney. Reagan proved that deficits don't matter. Reagan didn't prove any such thing, Dick. I hope you're listening. He just proved that we could have a successful economy while we still had debt. But debt and deficits are 2 different things. Deficits are the amount of money that we spend as a nation over and above the amount of money we take in taxes and fees. And right now, that's 57% from taxes, fees, 43% we borrow, okay? So every year at the end of the year, they total up all the money we spent that we didn't have, and that gets added to the national debt. I've said this before, but I mean, just during the 8 years Obama was in office, he doubled the national debt. No one had ever done that before. Matter of fact, he added more to the national debt, $10 trillion, than all the 40 presidents before him and all the 200 some years before him. And unfortunately, President Trump has not done much better, thank you, because he didn't campaign on reducing the debt like Reagan did. He campaigned on other things, and he's doing what he said he would do. But I wish he campaigned on lowering the national debt, because that's what causes inflation, and that's what ultimately is going to bring our country down. No matter how good our economy is, the debt is going to eat us up.
Yeah, that's what John was saying earlier. You know, he's still out there. Let me just open his mic up and see if he's here.
Sure.
Okay.
I like John.
I do too. I just opened his mic up. I don't know if he's listening though. But that's what he was saying earlier. At this thing with gold going up to $2,000, you know.
That's a precursor.
Yeah.
You know, it's a signal.
It is. It is. And you know, the Ray Dalio guy, you know, if the head of the biggest hedge fund in the world is saying this, you know, people are going to notice. And yeah, he's not listening. I'm going to mute him again just in case he sneezes or something.
Well, you know what they say about great minds working together. The fact that you and he and I all think the same, that's actually kind of scary for people that know me, you know. But anyway, Dick Cheney's not my favorite dude. So America's sacred cow is a Federal Reserve System. You know, in India, they actually worship cows.
Mm-hmm.
So that's why McDonald's and Burger King don't do well over there. Maybe with this new, what do they call it, Impossible Burger, maybe they'll be able to get people hamburgers now. Have you had one of those?
No, I have not. No.
Try it out. It's amazing. You won't be able to tell the difference between that and a regular Whopper.
Well, I honestly, I don't eat Whoppers. You know, if I'm going to eat something from Burger King, it's just going to be a plain old cheeseburger. That would be it. But Jake has had the Impossible Whopper, and you didn't think it was so impossible. But I think
he didn't think it was that good?
Well, I think it didn't fill him up enough. He needed like 3 of them.
Oh, okay. They are a little thinner. I will say that. Yeah. But you can get that, something like it called Beyond Meat in health food stores and stuff. And they have sausage, and they have patties and so on. And really, I mean, it tastes just like meat. It cooks like meat. It sizzles and broils. It's pretty impressive, but it's all plant-based. But that's not exactly why we're here today. So our
sacred cow.
Our sacred cow is the Federal Reserve. People have been taught from school on that the Federal Reserve is what keeps our country in balance. Actually, the Federal Reserve prolonged the Great Depression with poor policies, and many, many times they pushed our economy in the wrong direction by making mistakes. One of the things that Ben Bernanke said, no, I'm sorry, what Ben Bernanke was the guy before him, Greenspan.
Yeah, Alan Greenspan.
He said, the fact that our econometric models have been wrong for the last 15 quarters, that's almost 4 years, right?
Mm-hmm.
Have been wrong for the last 15 quarters, doesn't mean they won't be right the next time.
Doesn't mean they won't be right the next time.
Right. So maybe 16 will be the charm, you know?
Yeah.
I mean, that's a true example of government think or government speak.
Yeah. Doesn't mean they won't be right.
So we've got a few minutes left here. I want to talk about the problems that we face as a nation and the solution. Right?
Okay.
And I'm going to do it a little backwards, because usually people lay out all the problems and then they say, okay, well, here's the solution. But I want to give you a preview. The solution is the 10-10-10 Financial Survival Plan. You will get that for free with the Gold Education Starter Package if you go to CFRNgold.com. And it's been reviewed by some of the best Christian businessmen and economists and bankers in the country. And they say it's the best asset allocation plan for precious metals they've ever seen. So it's worth your time to see it. I want to mention it now because I won't be able to get to it today and explain it. We'll do that next week. But no, because I don't want to leave people depressed, you know. I'm going to tell you about some problems that we're facing, and I don't want you to go home and get in bed and pull your covers over your head. I want you to know there is hope out there, okay? The 10-10-10 financial survival plan. So here's the problems. And these aren't all of them, but these are the main economic problems. Massive debt and inflation, they go hand in hand. Inflation causes deficits. Deficits get added to national debt. Bigger the national debt goes, the less the dollar's worth, which is another inflation, another name for inflation, the dollar dropping in value, right?
Mm-hmm.
Then worthless currencies. We only have one worthless currency in this country, but worldwide, almost all currencies are worthless. Currency and economic wars. These have gone on throughout history. Economic wars farther back, where one nation would blockade the ports of another nation that couldn't buy and sell and so on. But currency wars have become more prevalent. The first big example of a currency war was in World War I believe it was. Yeah, they had U-boats in World War I, right? The submarines.
World War II, I knew they had them. I don't know if they had them in World War
I think it was World War II. Anyway, Germany was printing British pounds by the millions, and they loaded down U-boats with them, and they floated them to shore in little rubber rafts, and they had their agents waiting on shore, and they started buying and buying and buying, putting this fake currency into circulation, which did two things. It caused inflation, but it also, when it became found out, made people suspicious of their own money. So that's an example of a currency war. China does currency wars against us by artificially dropping the value of their currency. Fractional reserve banking is another big problem. The China question. We're making some progress. I should say the president's making some progress, but hopefully he's going to get their agreement that they're going to stop stealing our intellectual property and stop forcing U.S. companies to be co-owned by Chinese. By the way, they still do that in the Bahamas, right next door to me. You, an American or any other person cannot own a company in the Bahamas and own 50%. 51% has to be owned by a Bahamian. So you got to find somebody that knows something about your field and is not going to drive your company to the ground. But
Right.
Bahamas is not a big deal financially. There are just a few islands. China is monstrous, a third of the people in the world. So the fact that they steal our intellectual property with impunity, and the fact that they force U.S. companies to not only take on Chinese partners, but when they do, to open up their vaults. You know, here's our secret formula. Here's how we made this electronic device. It's patented. Nobody else knows how to do it, except now we have to tell you, and then the Chinese partner tells the government. That's why the Chinese have been able to produce a lot of military electronics that look amazingly like our U.S. stuff. It's because they stole the code, I guess. Yeah, sorry about that.
Yeah, that's okay. Yeah, no,
Yeah.
when you're talking about intellectual property, I mean, that's what it is, really. It comes down to software generally. And
yeah. And then there's a potential for collapse. I don't think we're going to see an economic collapse in this country anytime soon, especially after Trump is reelected. I think the economy will get even stronger. And the growth. You know, Obama said, well, you know, these days are gone. You'll never see more than 2% growth. All those jobs in coal and the automobile jobs and the manufacturing jobs, they're gone forever. It's never going to happen again. Well, Trump has proven him to be a liar on that. So I don't think that until we get another Democrat in office, we're going to see an economic collapse. But I think there's a very real potential for a collapse of the stock market because the economy and the stock market, regardless of what most people think, do not always track with each other. And go back and just overlay a chart of the economy over the Dow, the S&P 500, the NASDAQ, whatever, and you'll see many instances where they move in tandem and many where they don't. So don't become overconfident, particularly those of you that might buy and hold stocks long term, that just because the economy is doing well, the stock market is doing well. That's not necessarily the case. Case in point, Warren Buffett is selling stocks, and he's usually a buyer. But he feels like the fact that it's at this new unsustainable high and that the values aren't there. The prices are there, but the value in the companies is not there to support the stock prices. So he's gradually going to cash, or I don't know, they didn't say in the article, maybe he's buying gold. If he's smart, he will, but you know, at least getting into some kind of hard asset like gold or real estate or silver, whatever. So let's look at these. Well, actually, let's not, because I see we're about at a time. I've laid out the outline of the problems, and next week I won't be here, Michael.
Okay.
I'll be preaching over on the other side of the state, so I won't be there. But the week after, we'll go into these problems,
Okay.
see how they affect you, and see what you can do about it. Sound fair?
That sounds great. That sounds great. I'll make a note here and I'll let Dwayne know.
Okay.
Okay.
All right. Well, Happy New Year to you. God bless everybody, and we'll see you in a couple of weeks.
Okay. That sounds great, Dr. Tom. Thanks for coming on, and thanks for giving us all this information. It's good stuff.
My pleasure. My pleasure.
All right. And everyone else, that's going to wrap it up for the afternoon session today, guys. If anybody has any questions, you can email support@cfrn.net. You can call 949-423-6464, or you can call me directly at 617-943-3298. That's my cell phone. If you have any questions, if you want to talk about anything, just give me a call, and we will. Yeah, hang on. Let me take the charts back. Dr. Tom's still got them. Here, I'll put them over here on my screen. I'm going to shut it off here in just a minute anyway. But yeah, I have to go get my son. But yeah, so we're going to wrap it up here for today. And if you have any questions about anything, remember there's a partners meeting tonight, 9 p.m. Eastern. It's probably just going to be me and Valerie doing the meeting. And if anybody has any questions about what it takes to become a partner, just send an email to support@cfrn.net, support@cfrn.net. And if you're already a partner, we'll see you at the meeting tonight. Okay. Thanks for coming, everybody. Happy Tuesday.